Buying a home is one of the most stressful and overwhelming processes to go through, or at least it seems that way. Over the last 3 years, I've been helping families and individuals achieve home ownership because I personally see the tremendous value in owning real estate, which I'm sure you do too, which is why you're here. So I want to break it down for you as simple as possible in a step-by-step process for you to follow. No jargon, no fluff, just straight to the point in each of these steps. And at the end, you'll realize just how simple this process really is. So let's get right into it. Step 1 being the most important. You need to ask yourself, am I ready to buy a home? And to help answer that question, there's 3 things you need to check off. Number 1 is income. Lenders and banks want to see that you have steady and stable income in order to help you qualify for a house. 2 years or more of employment history is ideal. In some cases, a lender will help you figure out a way in case you haven't met the 2-year history yet. If you're currently in college but also planning to buy a house in the near future, some lenders will even allow college experience to count towards this. As long as the field that you're currently studying and the career you're looking to pursue is all within the same industry, a lender will be able to figure out a way to help that count towards your work history. And if you have had multiple jobs over the last 2 years, once again, as long as it's within the same industry and there's not too big of a gap, this shouldn't affect or prevent you from qualifying. Number 2 is going to be your credit score. And don't worry if it's not absolutely perfect. In most cases, if you have a 620 credit score or higher, that is considered good. And of course, the higher the credit score, the better interest rate you also get. In some cases, some lenders can go as low as 580, but just know that that might come with a higher interest rate. Your credit score is one of the easiest ones to work on if you currently don't have the best credit score. I would say that ideally try to aim for a 720 credit score or higher because that will give you the best access to the best interest rates and terms for your loan. Lastly, number 3 is your savings. This will come in 2 parts, your down payment and closing costs. So many people often forget that aside from your down payment, you also have closing costs. In most cases, people often put anywhere from 0 to 20% down payment. Now, don't let that scare you because there are different programs for your unique situation that allow you to put less down payment if you meet certain requirements. For example, if you've been in the military, you qualify for a VA loan, which allows you to put as low as 0% down payment. One of the best options for all first-time homebuyers is an FHA loan, which is one of the most commonly used and often heard of for first-time homebuyers. An FHA loan allows you to put as low as 3.5% down payment. And for those first-time homebuyers that have a higher credit score, you might qualify for a conventional loan that allows you to put as low as 3% down payment. Those are the 3 most commonly used loan programs for first-time homebuyers. Here's the thing that I want you to remember about your down payment. If you currently feel that you don't have enough savings for your down payment, you have 3 options. Number 1 is that you can have a family member provide you the funds in the form of a gift. Number 2 is down payment assistance programs. Now, there's plenty of grants and programs to help you with your down payment, so I would ask your lender to give you the best recommendations as to which ones you would qualify for. Now, the second part to the money you'll need is for closing costs, the part that people often forget. Now, with closing costs, these are all the fees and costs that are associated with purchasing your home. Typically, this will range anywhere from 2 to 3% of the purchase price. Although closing costs might not seem the greatest, there are different ways to cover this. One of my absolute favorite ways is when you have the seller give you a credit to cover those closing costs. Essentially, you're negotiating with the seller to give you money in order to cover that cost. In some cases, a lender will also have different options to lower down your closing costs. So if you can check each of these boxes, your income, your credit score, and your savings, you have completed step 1 in planning your finances. Woo! So let's go on to step 2. Step 2 is finding a local realtor. The first question I want to answer here, do you even need a realtor? As a realtor, I'm shooting myself in the foot here, but you don't need one. But if you're a first-time homebuyer, I would highly encourage you to use one, and here's why. The first one being the most obvious. It's free. It comes at no cost to you. And the reason why this is because the seller is actually the one that pays the commission. They pay the listing agent a commission, and the listing agent shares that commission with the buyer's agent. So you don't have to worry about paying out of pocket for a realtor. The second reason, which I think is the most important, especially in your case if you're a first-time homebuyer, when you hire a realtor to help you buy a home, that realtor represents you and only you in the transaction, while protecting you and keeping your best interests always at heart. Because at the end of the day, this is one of the biggest financial investments you'll probably ever make. So I would highly encourage you to hire a realtor and set that agreement. That way they can help you achieve your goal of homeownership. So what are some things to look for in a realtor? I would say a couple things here. Number 1, make sure they're familiar with your area and your market. Someone who knows and understands the local market will have a bigger advantage to help you find the right home. I would also encourage you to find realtors that are full-time versus part-time. A full-time realtor, this is what they do day in and day out. Chances are they're a better expert in the industry and in that field. And where a full-time realtor really shines is when they're able to work with your schedule to find times to show you homes. The last piece I would look for in a realtor is if they work with first-time homebuyers. Working with first-time homebuyers is a very specialized process and can also be very emotional because it is the first home you're buying. It's a big deal. And so you want to make sure that your realtor has your back throughout the entire process. Step 3, get pre-approved. This is the part where you connect with the lender to see how much you qualify and to get pre-approved for a mortgage. Unless you're going to be using all cash, you're probably going to need some financing. So where do you even find a lender? There's a couple things here. The first one is ask your realtor for recommendations. Most realtors have established really good relationships with local lenders. They will know which lender to recommend that best fits your needs and your unique situation. And don't worry, realtors are not incentivized to pass on business to lenders. That technically is illegal. So ask questions and see which one is the best fit for you. And I'll be honest, almost all lenders offer the same loan programs across the board. Whether it's a local lender, a bank like Chase or Wells Fargo, a credit union, or even online lenders like Rocket Mortgage. Even though they might all offer a similar variation of loan programs, not all lenders work the same. For example, a bank or credit union might only work certain hours and days of the week, whereas a local lender might be available at all times, including weekends. So here's a few things to keep in mind when choosing a lender. Make sure they have good communication and you can easily access them. That's going to be crucial, especially once you get into contract. If you have a quick question, you can easily text them or call them. The best lenders that I work with love to solve problems. The reality is not everyone's home buying situation is the same. So a good lender will find different options to help you qualify. Your realtor and your lender are the two most important pieces throughout the entire home buying process. So choose them wisely. So after choosing a lender, here are the 5 things you're going to need to start a mortgage application. Number 1 is your most recent 30 days of pay stubs. Number 2 is your last 2 years of tax returns. Number 3 is your last 2 years of W-2s or 1099s if you're self-employed. Number 4 is your 2 most recent bank statements. And lastly, number 5, your lender will do a credit pool. Now that part scares most people because they're worried that it might affect their credit score. But the reality is it affects your credit score very little. It might drop a couple points, maybe 5 max, but that can easily be recovered over the next couple months. The reason why a lender will do a credit pool is because this will give you the most accurate numbers to help you qualify. Your credit score, if you remember, will determine the interest rate you get. And if you're unsure about your credit score or you think it might not be as high, some lenders can do a soft pool where it doesn't affect your credit score at all, and they can give you guidance on how to improve your credit score. You don't need to go and pay for a credit repair. Your lender will be able to help you with this. Once you submit your application along with all the documents, a lender will review all this information and provide you with a pre-approval. If you want to go the extra step to give you even a bigger advantage, ask your lender to get you fully underwritten. The difference here is that a pre-approval just shows that you qualify to buy a house. But when your application goes through full underwriting, they make sure that all your information is accurate and true, and there's going to be no hiccups once you get into contract on a house. Once the lender provides you with a pre-approval letter, that letter will be good for about 3 months. Because remember, things can change. Credit score might change, the interest rate might change. Nothing is locked until you get into contract. But if for some reason after 3 months you still haven't got into a home, a lender might ask you to resubmit some information and documents, which is not the end of the world. So don't worry. Step 4 is when we get into the fun part. Home shopping. This is when the search begins. 4 things I want you to remember here. Number 1, establish your criteria. Whether it's yourself, a partner, or a spouse, go through your list of criteria that you want in a house. A 3-bedroom, a 2-bedroom, a garage, no garage, a big backyard, square footage of the house, the different cities you want to be in. Lay this out and write it down. The second thing here is very important as well. Create a needs versus want list. This is where you set your priorities. Remember that as a first-time homebuyer, you're not buying your dream home. So you might need to make some sacrifices, at least in the first one. Write down what you actually need. For example, you're a family of 4 and you absolutely need 4 bedrooms. But maybe something on your wants list is that you want a pool. If there happens to be a house with 4 bedrooms and a pool within your price range, then of course, go for it. But make sure you set those priorities from the beginning. And by creating this filter of wants versus needs and setting those priorities, it's gonna make the home shopping experience a lot more seamless. You won't have to look at hundreds of homes because you've narrowed it down. And don't be afraid to share this information with your realtor. The more information you can provide them, the better they can help you in finding the right home for you, because that is exactly what your realtor is there for. They're not just there to sell you any house, but a house that you actually love and are comfortable buying and living in. Both you and your realtor will have homework when searching for homes. When a home comes on the market that you like, you want to be the first one to see it. So schedule a time with the realtor to go and view it. Sometimes there can be an opportunity to submit an offer before anyone else. So speed is key here. Step 5, you found the home that you love. It's time to make an offer. When you know that you have found the one, don't wait too long. And no, it's not just me trying to get you into the home. Remember that you're not the only buyer out there shopping. There might be other buyers that are also looking at the same house as you. When writing up the offer, this is something that your realtor will help you with. There's a lot of terms and details that go into writing this offer, and your realtor will be able to explain when the time comes for this. But here are some of the basics that you should know. Number 1, of course, price. What are you paying for the house? Number 2 is the amount of days that it will take you to close on the property. In the state of California, this is typically anywhere from 20 to 30 days. Number 3 is removing any contingencies, if any. There are 3 main contingencies to help you and protect you as a buyer: an inspection contingency, an appraisal contingency, and a loan contingency. The last thing to remember when writing up the offer is if you're negotiating any credits from the seller, that's where you can include it. Typically, most sellers will respond to your offer within a 24 to 48 hour period, but this can always vary, so check in with your realtor about this. Once you submit the offer, the seller has 3 options here. They can either accept, reject, or counter your offer. If they accept, congratulations, you move into contract. If they reject your offer, chances are they probably went with another offer. And if they counter it, they might have not liked a couple things about your offer, but that's when you have a chance to go back and change your offer if it still makes sense for you. Step 6 is very straightforward. Submit your deposit, and they call this your earnest money deposit. Typically, this is done within 3 days of your offer being accepted. And essentially, your deposit is showing the seller that you're actually serious about buying this house. Step 7 is the due diligence period. There's two main things that happen here. This is when you'll be able to do a home inspection, as well as an appraisal will take place. With a home inspection, if this was put in the contract, you are able to do different types of inspections on the home. The two most common are the general home inspection and a pest and termite inspection. In some cases, it also makes sense to do a sewer inspection, a roof inspection, a foundation inspection, and many more that are more specialized to the home. And one of the things that many people often confuse about a home inspection, they think that it needs to pass or meet certain requirements of the city or county, but a home inspection is actually just a way for you to get an overview of the condition of the home. There's technically no pass or fail in this case. Of course, the inspection is going to be done by a licensed inspector, but there's really no pass or fail test. I personally have bought many homes that are fixed or upper condition, and when I have seen those reports, usually there's a whole list of items that are just in red, the most alarming things. But in my case, since I know that I will be remodeling the place, it doesn't concern me too much. But just know that the inspection report will point out different items about the house. And some inspectors will even make recommendations to fix or repair the item, and also an estimate of how much it will cost. Each of these inspections usually range from $300 to $500, and that is paid directly to the inspector. The main things I like to look out for is the roof, the HVAC, the foundation, and a general idea of the property line. If any of these items present a red flag, they're usually pretty costly to fix, especially something like a foundation of a home. That can get very expensive. But let's just say that you do find some things that do need a repair. Unless you already stated from the beginning of the contract that you were buying this property as is, you can go back to the seller to renegotiate some of these terms. You might ask the seller to discount the price, to give you a credit, or to fix the issue. And once again, same as the initial offer, the seller can either accept, reject, or counter that. The second thing done during this period is the appraisal. The lender will have an appraiser go out to the property to do their own inspection and determine the value of the house. The lender just wants to make sure that they're not lending you more if the value comes in lower. There's 3 outcomes that can happen after an appraisal is done. It appraises at the sales price, which is good. You're not overpaying for the house. It can also appraise above the sales price, which is actually the best one because you might be walking into some equity before you even buy the house. Or the appraisal can also come in below the sales price, which means the value of the house is less than what you offered. So now that creates a gap. And once again, you can renegotiate with the seller to determine who's going to cover that gap, whether it's you, the buyer, or the seller, 50-50, or you can back out of the contract if you have the appraisal contingency in place. But in most cases, the seller wants to make this work because we're almost to the finish line here. So it makes more sense for them to negotiate with you than having to start the process all over again with a new buyer. In some cases, if you're using an FHA or VA loan, an appraiser might take notes of some repairs that might need to be completed before closing. The last thing done in this period is getting home insurance. Unless you already have an insurance provider, the lender will make some recommendations. There might be a need for additional insurances like for flood, fire, earthquakes, depending on where the property is located. Step 8, the final walkthrough. Typically 3 to 5 days before closing on the home, you and your realtor will take a walkthrough of the property to make sure that everything is in the same way described as in the contract and agreed to. And if any repairs were made after the contract, to check if those have also been completed. If the appliances will be staying, make sure to check that those are also still there. Around this time, you will also receive a clear to close from your lender. That just means that all the documents have been received and you have been approved for your loan and have the green light to close. And now you're off to the signing table, which is step 9, sign closing documents. Typically, you will also meet with a notary to get these documents signed. At this point, you will also get a document called a closing disclosure. This will have all the important numbers that you need to know, like your interest rate, the loan amount, and cash to close, meaning the money that you need to finish the purchase. And no, this cannot be physical cash. The money needs to come out of one of your accounts that you have already provided the lender. And finally, the last and final step, you have made it to the end. Step 10, closing day. Congratulations. You are a homeowner. Once the remaining funds have arrived to the escrow company, they will be able to record with the county and you are officially the owner of the property. After this, schedule a day and time to meet with your realtor to hand over the keys to your new home and celebrate. If you have made it this far, I can almost bet that you are someone serious who is actually looking to buy a house in the near future. And if that's you, I have one very last thing that I want you to remember. Because this is your first home, remember that it won't be your dream home, especially if you're someone younger. This is only the beginning. The whole point with this first home is to get your foot in the door to homeownership, to learn what it feels like actually being a homeowner, paying the mortgage, doing repairs and maintenance to the home. Use this first home you ever buy as a stepping stone to get into your dream home. Remember that being a homeowner is a big sense of pride, but it does come with responsibility. My name is Roberto and I help individuals like you achieve homeownership. If you have more specific questions to your situation, feel free to leave a comment below or send me a message on Instagram. I'd be more than happy to answer any questions. And if you're local in the San Francisco Bay Area and surrounding areas, you just might know a realtor friend. Peace.